Hi friends. So once you are into the stock market, the basic fundamental advice what you get from the experienced people in stock market is don't blindly follow the tips. If you don't follow the tips, then what to do? They will simply say do the stock analysis before buying. So what is stock analysis? For doing stock analysis, you should know how to read the financial statement. The financial statements are available in annual report. So what are the different types of statement available in annual report? All these things we will see in this video.
Hi friends, welcome to a brand new segment of FinveStocks, Friday Basics, which will give you good insight about Indian equity market. My sincere effort in this segment is to create awareness to all in simple language. This series will be arranged in such a way so as to understand everyone who are beginners. Please share this video to all those who wish to learn, understand and participate in stock market. Please don't forget to subscribe and click the bell button to get the notifications of upcoming knowledge-packed videos on personal finance and stock market. Welcome back to FinveStocks, where we make everyone understand the basics of money management. Before going into this video, make sure you watch earlier videos of this series, which is mentioned in the I button.
Hi friends, welcome back to FinveStocks. In our previous video, we discussed about stockonomics. Stockonomics is nothing but the stock market economics. There we discuss lot of terms which are basics to economics that will come across in our stock market journey. Today we will be discussing the second video of fundamental analysis, that is annual report. So before going into details about scripts, one should understand how to read the annual report. So what is an annual report? By definition, an annual report is a corporate document disseminated to shareholders that spells out the company's financial condition and operations over the previous years. So let's see what are the main contents in an annual report. So the main contents are, first one is the business information, where they will give about the information regarding the business they do. The second one is the corporate information. Then comes chairman's letter and board report. Then they will show about the shareholding information. Then they will mention about corporate governance, management discussion and analysis is the next, and the final one is the most important one, that is the financial statements. Now let's see each one in detail. First one is the business information. In business information, company will give the business model. Also it will give an overview about the industry. It will tell about the history of the business, which all products and services company is involved, the infrastructures available with the company, and also the location where the company is present. Next one is the corporate information, wherein company will give the management names, who is the promoter, who is the CFO, which auditor like KPMG, Deloitte, EY, PwC, which auditor is involved in doing the audit of the company, and who is the banker. The third one is the chairman's letter and board report. Chairman's letter will normally talk about the future plan of the company. And in board report, it will give a detailed plan about the subsidiaries, what are the salaries and transactions happens in the company, etc. So the next one is shareholding information. Shareholding information is how the company is being purchased by various entities. For example, if you see the shareholding pattern of Zomato, there are a lot of entities, those who bought a part of stake in Zomato. Similarly, for a company, it will tell how much percentage the promoters owns the company, what is the percentage of shareholding with DAIs, with FIIs, with mutual fund, etc. So basically it will tell about the shareholding pattern of the company, and also it will talk about the subsidiary holding of the company. The next one is the corporate governance. Corporate governance is one of the most important parameter everybody looking forward. So what is corporate governance? By definition, corporate governance is a system of rules and practices that determine how a company operates and how it aligns the interest of all its stakeholders. In simpler terms, we can say it is the way by which a group of people managing the company. So based on the management and the governance, we can say the company is having good governance or bad governance. Generally, people prefer companies having good governance, and normally people avoid companies having bad governance. Next one is the management discussion and analysis, wherein it will talk about the industry overview and also about business performance, how the company performed in last 1 year. and also we'll talk about the risk involved and way forward. And the last one is the financial statement, wherein we will be going in detail about all three statements. The first statement is the profit and loss statement, next comes balance sheet, and the last one is cash flow statements. So we will see all these three in detail. Before going into financial statement in detail, we will see what is earnings. Earnings are of three types: quarterly earnings, half yearly earnings, and full year earnings. So let's see each one by one. SEBI has mandated all companies listed in NSE and BSE has to come out once in 3 months, called a quarterly result. In a financial year, it is divided into 4 quarters, like quarter 1, quarter 2, quarter 3 and quarter 4. Quarter 1 is from April to June. Similarly, quarter 2 is from July to September, quarter 3 from October to December, and quarter 4 from Jan to March. Combining the quarter 1 and quarter 2 we call as half yearly results. That is H1 financial year 22. And the second half is from October to March, that is quarter 3 and quarter 4, combination of quarter 3 and quarter 4. And the whole financial year is combination of all 4 quarters. Like if you join quarter 1, quarter 2, quarter 3 and quarter 4 results, it is called the full financial year results. So now we will see financial statement in detail. So we'll start with what is a financial statement. A financial statement shows you where a company's money came from and where it went and where it is now. First one is the income statement, or we call as profit and loss statement, because it will show the profit and the company. So profit and loss statement shows company's revenue and expenses for a particular financial year. It indicates how the revenue are transformed to net income or net profit. So simply telling, revenues conversion to net profit is the profit and loss statement. Formula for finding out profit or loss is revenue minus expenses. So basically a profit and loss statement contains revenue, that is also called the top line, because it is on the topmost portion of the statement. So top line is called revenue or also called as sales. Then comes expenses, what all expenses incurred by the company for the operation. Then comes what all taxes company is paying and depreciations, amortizations, etc. Then comes the profit or loss, that is also called as bottom line. And the last one is EPS, that is earning per share. So all these terms we will learn in detail. This is the live example of recent results posted by Reliance for quarter 2 financial year 22. This is the income statement or profit and loss statement of Reliance for quarter 2. In an income statement or a profit and loss statement, the major contents in this statement are revenue, that is the top line, then comes expenses, then comes tax and depreciation or amortization, net profit and earning per share. Next one is the balance sheet. Balance sheet shows how company has evolved financially over the years. So balance sheet is the statement of financial position of a business that lists the assets, liabilities and owner's equity at a particular point of time. It shows the business net worth at a particular point of time. The most important thing in a balance sheet is assets and liabilities should be matched. The balance sheet will tell you how much assets the company is having and what all the liabilities company is having and what is the amount of shareholders' equity at a particular point of time. In a balance sheet, the assets should be matched with liabilities along with shareholders' equity. So this is showing a typical balance sheet as on December 31st, 2016 for a particular company XYZ. It mentioned all the assets on the left side and right side it shows the liabilities as well as the owner's equity. So overall assets is matching with the overall liabilities plus equity. The main criteria of balance sheet is to balance assets along with liabilities and equity on the other side. So here we mentioned one live example of Reliance for quarter 2 financial year 22. Here it mentioned all the assets on the left side and on the right side it shows the equity as well as liabilities. So both these numbers are matching. The left side it is showing overall assets of the company. It is around 14,29,547 crores, whereas on the other side it shows equity and liabilities. The total value of equity along with liabilities is around 14,29,547 crores. The third statement is the cash flow statement. What is a cash flow statement? The statement of cash flow shows inflows and outflows of a cash for a company over a particular accounting period. Cash inflow is normally generation of cash and cash outflow is spending or usage of cash. So net cash flow is the difference between these two. So what is the use of this cash flow statement? It is just to understand how a company's operations are running. where the company's money is coming from and how it is being spent. So it also measures how well a company manages its cash position, how it generates cash, how it pays the debt, how it meets the obligations for funding and operating expenses, etc. So cash flow statements are prepared on a cash basis, while the other financial statements like P&L and balance sheet use accrual based accounting. So now let's see what are the main components of cash flow statement. The three basic main components of cash flow statements are operating activities, investing activities and financing activities. So let's see each one by one. First one is the operational activities, wherein the cash flow related to sales, manufacturing, marketing, resource hiring, etc. will come under this category. The next one is the investing related activities. The investment made by the company to reap benefits comes under this investing activities. Other examples of investing activities such as deposits, equities, land sale, property, plant and equipment, all this will come under investing activities. The third wing is the financing activities, wherein all financial related transactions will come under these financing activities. Example, dividend distribution, paying interest, raising debt, issue of bonds, etc. will comes under financing activities. So it is always good to have positive operational activities because that will show how the company is generating cash from the operating activities. And it is good to have investing activities on negative because it will show more intensive investment by the company on other instruments that will reap more profits for the company. And the third one is financing activities, wherein it is always good to have negative value because it will show keen interest to pay out the debts, pay the dividend, all these things. Now let's see a live example for getting a better understanding. So here we projected the cash flow statement of Reliance for Q2 financial year 22. On operational activities front, it has generated a cash of around 56,535 crores, which is positive for the company because it has generated a positive cash from operating activities. Whereas the cash flow from investing activity is negative 58,456 crores, which shows company has done some investment, some purchase of other investments, dividend income, etc. So which is very good. And the third one is cash flow from financing activities. Company has generated a cash flow of 3,226 crores from financing activities, which is very less compared to the cash flow generated from operating activities. So if you see overall net cash flow, it is around 19,074 crores. So that is positive for Reliance. To do the company analysis in a better way, separate ratios has been developed which are derived from the financial statement called the ratio analysis. There are different types of financial ratios like profitability ratios, liquidity ratios, solvency ratio, efficiency ratio and market ratios. We will see all these type of financial ratios in our upcoming videos. Some of the important financial ratios are price to earning ratio, price to book ratio, ROE, return on equity, ROCE, return on capital employed, debt to equity ratio. All these are very important ratios which can be derived from the annual report. So in our upcoming videos, we will go deep into all the financial ratios and we will have a good understanding about financial ratios, which will benefit you to understand and analyze the stocks for better investment purpose.
Please do like if you like the video and don't forget to subscribe to get the notifications of upcoming videos on personal finance and stock market. Please post your valuable comments. Do follow the Friday basics to make your stock market journey easy. Thanks for watching and have a good day.